Alright everyone, welcome back here to another video with Invest for Tomorrow. I'm so excited to share with you guys the top 3 tips right now that I would tell a new beginning investor or even an experienced investor that is looking to take their investing journey to the next level. And we're going to talk about these top 3 tips, and all I ask for in return is for you to smash that like button to let me know you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So these top 3 tips, I talk about them all the time. I came across an article recently that had it as their top 3, and that's what really sparked my interest in stating, you know what, I want to talk about this and share it with investors that may know this already or are in the journey of trying to figure this out. So I hope you learned something new and that you can add something onto your strategy based off of what I'm going to share. So we're going to talk about these top 3 tips based off the article, and I'll elaborate through each one how I would use it and what it is that's worked for me through my investing journey. So number 1 is creating a trading plan. Okay, a lot of investors trade without a plan. Okay, before a single dollar, right, is put at risk, a trader needs to have some idea of how they'll make profit. That's like one of the biggest things that I emphasize all the time, because I have a daily goal when I'm day trading over at the Discord, right? All the opportunities that we talk about every single day, I have a 5 to 10% goal. Like, I already know as I'm risking a certain amount, right? And I also know how much I'm willing to lose. Okay, to be able to win, you have to be able to lose sometimes. It's not always going to be a perfect win, 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 win. The consistency, if your entry's not the best for whatever reason, or volatility just sparks up out of nowhere, it just throws off the whole plan. But it's all about, having a plan and knowing the potential profits you're going to be able to, obtain from this, right? And how much you're willing to lose. So it's huge to have an idea of how much you're willing to profit. So my daily goal is 5 to 10%. If I'm caught up in a position that ends up going above 10%, I start analyzing how far up am I willing to go. And let's say I hold it to, my goal was 5 to 10%, it jumps up to 15%, and all of a sudden it pulls back to 13%. Well, my initial goal was 5 to 10%. If it pulled back from 15 to 13, I'm out, because I want to turn those unrealized profits into realized profits. And it says it here, a trading plan is a personal written document that states what we will trade and when, how we will enter a trade and why, when and how we will get out of winning and losing trades, and how we will determine our position size. They're the basics. Additional rules can be added over time as needed. So this is something that you officially have to have written down somewhere to remind yourself, right? It's not like an official written document or anything like that, but it's something that you want to keep right there in front of you to remind yourself. And it's everything I just said, how I'm going to get in, how I'm going to get out, and how much am I going in for, and so forth, right? So that is one of the most important things to even get into a trade. If you're going into a trade without a plan and you don't even know when you're going to get out, you're going to end up in a position where you'll either end up holding or losing because of the fact that you didn't know when to get out and you had the opportunity to get out, either to break even, cut the losses smaller, or even profit. Now, in this situation here, when you look at this, right, this is one of the trades I talked about this last Friday on the Discord. Now, I usually look for the pullbacks that happen after the bell, and then it gets very volatile. It happens in like 5 minutes. It hit a low here of 390 and sparked up to 419, okay? If you do the math there, that's almost 10%. So on that dip, somewhere around that dip, either, 390, 395, anywhere between that area, I would look for a position of opportunity, get myself in, and I already know that once I see 5 to 10%, I'm going to get out. So I hold, I go through the volatility, it's sparking up, it goes all the way up to almost 10%, then it pulls back down to almost 9, and then right here, it's like around 7 to 8%. I have to make a decision, right, before I just keep on going, and then it just continue to collapse. And that's all it took, a few minutes to get that 5 to 10% goal. That's my goal daily, right? So here's another one that I talked about, and that was ARDX, okay? And we're going to look at that chart in just a moment. I want you guys to learn from this, because this is huge, right? This is another stock that I talked about that from the moment of the bell, it dipped a little bit and it just ran for a few minutes, right? Almost 30 minutes, and it went up nearly a 10 to 15% jump. But we're going to look at that in just a moment. Let's talk about tip number 2. Prove your methods before you trade real money. And this is something I encourage investors all the time to actually do. And more than 9 out of 10 times investors tend to not do it. And I don't know why, because it's actually a great way to make money and save money. Even though you don't see your account growing, you have your capital protected. Protecting your capital sometimes is worth more than jumping into a trade hoping that it's going to go up to make you a few bucks compared to what you're investing. So one of the best ways to make money is protecting your capital and investing in yourself. I say this all the time. Invest in yourself before investing in the stock market. That's something I decided to do. Doesn't mean you have to do it, but I decided to invest in myself to understand the markets and the patterns before investing into other assets. If I skip investing in myself, I wouldn't even know how to invest anywhere else, because investing in yourself is way more valuable than any other investment you can make. So think about that. So this is what I like a lot about trading, with a demo account. If the plan doesn't work in a demo account, it won't work in the real world. That is it. So if something's going wrong, you're getting to learn it through the demo account, not through your real capital. I know we want to see our capital grow, and investors are like eager to start trading because, for example, this stock here, right, it went up, and if it was a demo trade, it's kind of like you spent 30 minutes of your time, doing that demo trade, and then your account didn't move. But protecting your capital and leaving it there is making you money, because throwing it into a day trade that you don't even understand, and you don't have a strategy, you don't have a plan, you don't have an exit, you don't have an entry, like all mapped out, that's going to lose you money. And leaving it there is making you money, and you're actually making more money, but not now. You don't see it now. You got to think of it as a growth stock, right? That it's not profitable yet, but it's growing. You know why? Because you're growing. You're investing in yourself. You're not using money as an investment right now. You're obtaining knowledge, experience. I think that's worth more than any number you can see on a screen. I've said this before, and it's so important. So let's say, for example, this stock jumps up and it pulls back here, right? And an entry is done right here. And it jumps up a few cents and then it pulls right back down really fast from like 183 to 181. It looks like it's about to hit 180. An investor might even get out and break even without noticing that they just skipped the run of 10% that was coming. So, all these little volatile moments, you have to understand as an investor what it is that you're doing, why you're in it. And if you're using your real capital, you're going to be very nervous, fearful, and uncertain because you want to protect that capital. So the best way to protect it is creating a consistent flow of a strategy, using a paper trading account, a demo account, to learn your entries and exits and protect that capital by leaving it there. And if you want to save up, if you're not trading anywhere else like a long-term trade, a swing trade, save up the money, let it grow. It's going to grow right there. You're growing, you're investing in yourself, and you're going to be able to grab all that money once you're consistent and you feel comfortable to make on some great day trades based off of the experience and knowledge you've obtained. Because this had multiple opportunities. Had them here, had them down here, 169 to 176. You do the math right there. That was about 5% to 10% again, and these small jumps of 3 to 5%. So it's not all about, a straight shot up or a crazy ride, if not having a strategy, having a goal, entries and exits. Okay, so let's talk about tip number 3, because this is one that states an investor's maturing in their trading journey, right? And it adds up to the strategy. It adds up to seeing consistency through the demo trading. But most of all, through this all, you want to create a day trading routine to avoid mistakes, okay? A routine includes getting up at the same time each day, starting to trade at the same time each day, and checking for scheduled economic data releases that may affect the market. This is all true. And I start trading at around the same time each day, every single day. If you pay attention to the stocks I mentioned every single day in the Discord, it's around the same time, and I start trading, which I've stated it before, and I stated in the Patreon series, Invest for Tomorrow Strategy series. When is it that I start trading? and what it is that I look for, right? Now, another thing too, to let you know that you've matured in your trading journey, which it took me a little bit to realize this once I started trading, and it's one of the best ways to avoid mistakes, because the biggest mistakes happen when you don't have a time set to quit trading for the day and then have a routine for reviewing all trades taken. So I do that every single day. I have a routine to review all the trades I've taken, the stocks that I was watching, how they did, what did I miss, what did I make. But this one was the hardest one, and it was called quit trading for the day at a set time. I had to do that because sometimes I would take a trade, for example, in the morning, right? And I had this run, let's just say, and I made 5% out of it. This was like a 10 to 15% run. It's sometimes impossible to get the bottom to the top, but sometimes it happens. But let's just say I made 5% on this run, right? And I see the stock dipping, right? And I see a dip around here and it makes sense to me, right? Or even down here. And I want to buy it because it looks like a dip that's about to curl and go back up, right? I would take a trade again, and all of a sudden it would jump up like 2-3%, and then it would drop like 5%. So if you do the math, right, I was up 2 to 3%, and I could have made 7 to 8% plus the 5 here, but it dropped 5%, and then I got a little bit impatient, and instead of waiting, because since I didn't enter here and I'm already down and I was uncertain, I didn't wait for this to come back up. So I ended up breaking even. I lost the profit I made in the morning. So having a set time to stop trading is key, guys, because once you've hit your goal, there's no reason to go chase more. You got to wait for the next day. That's just the way I do it, right? That's what I tell myself. I have to wait the next day to see what opportunities arise, and I'll go get another 5 to 10%. 10 to 20% is a great day, and 20% plus is a home run, which those happen as well. But the most important thing is realizing, when to stop, and once, a profit has been made, take it and keep it that way, because sometimes you can turn a profitable day into a losing day. So create a day trading routine to avoid mistakes. If you learned something new, don't forget to subscribe. Click on the bell so you don't miss a single video that I post. Share this with a friend so they can receive this insight as well. And if you want to know what stocks I watch daily, the link is down below to the Discord. We look forward to having you join us, and it's a growing community of investors all looking to learn and grow together, and you can become part of that too. As always, thank you guys so much for watching, and let's make some money.